Today, we're going to talk about practical ways parents can teach children the 5 most important finance and investing lessons at home. These aren't abstract ideas, they're habits, actions, and exercises that kids can actually do, lessons that stick. The first lesson is spending less than you earn. At home, this can start with something as simple as an allowance or small earnings from chores. Encourage your child to divide money into jars, one for spending, one for saving, and one for giving. Let them see where money goes and guide them with questions like, if you spend it all today, what will you have for something bigger tomorrow? This simple habit teaches prioritization and builds discipline that lasts a lifetime. The second lesson is paying yourself first. Teach this by modeling it. Open a savings or custodial investment account for your child and set up automatic deposits, even just a few dollars each week. Let them watch it grow over time. They'll start to see the power of consistent saving and the satisfaction of watching their money work for them. When saving becomes automatic, it removes emotion from financial decisions and reinforces long-term thinking. The third lesson is starting to invest early, even with small amounts. You don't need complex trading accounts. Custodial brokerage accounts, fractional shares, or kid-friendly investment apps work perfectly. Let them pick a stock or fund they understand, maybe a company they like, and track its progress. Show them that ups and downs are normal. This lesson teaches that time is more important than size, and compounding works best when started young. The fourth lesson is owning assets, not just things. Encourage children to focus on projects or purchases that create value. This could be a small business, a lemonade stand, or selling items from a garden or craft project. Contrast that with items that only consume money, like toys or trends. Ask, does this make money or does it just cost it? Real life decision making like this helps children internalize the difference between assets and liabilities. The fifth lesson is patience and ignoring hype. Practice delayed gratification at home. When a child wants a toy or gadget, have them wait a week or more before buying. Track whether they still want it. Combine this with discussions about social media, advertising, and viral trends. Teaching them to wait and think critically strengthens financial and emotional habits, helping them resist impulse decisions later in life. All of these lessons are more powerful when parents model the behaviors themselves. Children watch what we do more than what we say. Share your own budgeting, saving, and investing decisions openly. Discuss choices, mistakes, and lessons in a safe environment. Make money management interactive, visible, and part of daily life. The key takeaway is this: financial literacy isn't a one-time lesson. It's consistent, repeated habits and conversations. Celebrate progress, not perfection. Encourage discussion, experimentation, and reflection. By making finance a living, interactive part of family life, children develop habits that put them decades ahead by the time they become adults. So start small. Use jars, apps, simple projects, and discussion. Automate savings. Show ownership through real examples. Practice patience and reflection. With consistency, these 5 lessons will become part of their identity. And that's far more powerful than any spreadsheet or lecture ever could be.